What is happening, people? Is Lunamite yet again. Today is our technical analysis episode. It is the 17th of July 2021, and let's get right into this. So, I'm starting off with the dollar index, of course, and I decided to go on the weekly today, and it seems really interesting this week. So, we've closed, it's really, I would say it's pretty interesting, but basically, we've closed pretty bullish on the week with little wicks to the downside. It looks like we've closed these up wicks over the past few weeks, and we've broken above this trend line. Could be a fake out. We'll have to see about that. So yeah, of course, on the daily, as you can see, like the original hypothesis was that we would reject this, and we've been seeing some pretty hard rejections over here. So we got that first one over there, then we went upwards, and we got a really strong one over here. Then we went upwards. It's really like quite a lot of fighting over here between bulls and bears. And then we got a weaker rejection over there, kind of like a final stand, rule of three, and then an up move. So we could, in fact, just continue upwards now. So this is our first impulse, second impulse, maybe even the third impulse. But I would still be pretty cautious on this trade, before actually going like conclusively to the upside. We've obviously, like, we look at these rejections here. This is obviously a sign that some people don't want it to go as high as possible, or high as they wanted to. So yeah, the weekly is pretty sold. I'm pretty sold on an up move for the weekly, just filling this, eyeing this zone over here towards the high 93s or mid 93s. So that's the dollar index, and that's driven by the euro, I believe, because euro takes up around 50% of the dollar index's value, something like that. So yeah, I would wait before conclusively going long. If we were to go long, then I would expect us to just break upwards towards the higher ground, but I don't think that's going to happen. Just a bit off with that. I do believe we might get a rejection over here. We are in an uptrend, classic uptrend over here. So we've got that trend line over there, making conclusive highs, or successive highs. Sorry. So we could make a high, but then I don't know. We'll have to see. Trends always break, and we are in a kind of selling zone. So I'd have to wait for that. I do expect us to maybe fill this wick, but that could be just. This is TVC, so this is an aggregate of all the dollar index data. I don't know if that wick is true on the other exchanges, but the market could be doing that. I don't know. So yeah, for the dollar index, I'm kind of mixed. So I'm going to conclude that dollar index, I'm mixed. We are in an uptrend on the daily, of course, on the 4 hour as well. We're in an uptrend, and the weekly we closed incredibly bullish. But I don't think it's going to be as easy as that, and I wouldn't really enter right now because if the move is already done, so it doesn't matter. But yeah, I'm looking to get maybe a sell over here before maybe re-entering at the BC before continuing upwards higher to reach these highs. Of course, we'll get a retracement once we hit these highs, and then we might have a teacup pattern where we'd go down to this BC and continue upwards. But yeah, I do expect long term that the dollar will increase as the Fed increases or decreases their monetary policy and adopts a QT, quantitative tightening approach to the market. But anyways, so I'm just going to look at 10-year yields, and of course bonds have been rallying. They've been rallying on the fact that why do bonds rally? They rally because there's no longer any fear in the market, I believe. So yields rally when there's fear in the market. So, but then bonds, they sell off when there's fear in the market. Oh, fuck, I just don't know. Yeah, that makes sense. But right now, it looks like bonds are in fact rallying right now. Of course, you can see we're on that down move. When yields are selling off, that means bonds are rallying. Just fucking hard to get your head around. Apologies for the language, but I believe this is on. So it's becoming a more safer environment. So yeah, there's confidence on like vaccines and stuff, I presume. So yeah, what would that have on like usually what we see, or what we have been seeing is a correlation between 10-year yields and the dollar, but I think this is obviously broken now. We would have seen a dollar sell off fully, but we've been seeing a rally instead over the same time frame, which is not really correlated right now. So I think this is a spurious correlation over here. Anyways, so yeah, I don't really have much to say on it, to be honest. It looks like we're going to rally, continue the rally, go down over here. We could potentially, let's go on the weekly. We could be looking for a buy over here, which is interesting. So I just seen that. If I go from this wick to this high wick, and we're at the 61.8% retracement, and we could in fact get a you know, an old wick off. So buying over here at the selling climax. I don't have volume here because there's no volume on these yields. If I saw bonds, we probably will get it. But look, we made that low, and then we would look for entries over here. Let's say on a daily, you can see that's the case over there. And if you see on the weekly, you'd be able to see it. Let me just put it in there. We could be looking for orders over here and maybe just close to this dotted line, red dotted line, to go higher. That's a potential, most likely to be ranging there. So let's go back to the dollar index. That would favor, if yields were increasing, then the dollar would increase as well. Just brain wheel. Just this is myself. You can just skip this part, but so yeah. So when yields increase, it's a sign that inflation is going to be higher in the long term. This is obviously the 10-year before, the 10-year yield. So yields increase, which means inflation's higher in the long term, which means that the Fed is more likely to intervene in markets to drive down that inflation. As you can see over the past few weeks, we've seen a sell-off in 10-year yields. That's on the idea that the Fed will enter markets to prevent inflation down the line. And yeah, so if Fed intervenes with MP monetary policy, then yields will continue to sell off as inflation is not as high as they expect, as bond markets expect. And then what that means is also that if the Fed is intervening with markets, it means the supply of dollars will increase and you would get a sell-off in the price of the dollars. So that's why there's a kind of inverse correlation there. Let me just work that out. Putting myself under pressure here. Doesn't matter. But anyways, so yeah, let's go to Aussie dollar. And yeah, so the Aussie dollar last week, I was quite bullish on it, but we are approaching the supply zone, demand zone, which could be a good place to get a retracement to go higher. I was expecting us to get some orders below this dotted line here, but we closed on Friday very bearish, and we made lows for the week on Friday, which is interesting. So we could continue this trend into Monday and pierce this demand zone, which is this, based on that rejection over there, and also the rejections of the zone here. So I do expect us to retrace once we've reached this area. We did get a really big spike in bearish volume, or just volume in general, which is a sign that if that could be the new selling climax. I think that's a better selling climax, sorry. So if I were to change the SC and AR to this, and also the AR to here, then this is a new setup, and then you would look for entries over here at the demand zone. So that kind of makes more sense. I believe people are pricing in bad retail sales for the Aussie dollar and monetary meeting minutes. So if there's worse than expected retail sales. The forecast is pretty negative based on the lockdowns in Victoria, major cities in Australia. Then of course you would get the market trying to price that down already. So I do expect that after the fact, which is the forecast, I expect the Aussie dollar to increase in value, or appreciate, and then go upwards maybe to this region over here. But in terms of, like, I did an analysis for Fortuna Capital, and I would have got stopped out on this already. Which is okay. You could get stopped every day, but it doesn't matter. Anyways, so looking to enter over here based on this volume and the retail sales. After the retail sales, I'll probably enter. But anyways, let's go to New Zealand dollar, US dollar. And Kiwi is interesting because it hasn't really moved anywhere this week, and it's stayed within the SC and AR. Really interesting candles here. Really don't know what to make of it. There is wicks here which could potentially be filled based on this momentum here. This momentum is caused by, or the reason why I would support the momentum is because we broke these this like pivot point over here, or with this price drop over there, and I do expect us to fill these candles, which is might be a really good selling opportunity here, just to fill that. But then go over here, we could potentially see a retracement. We'll have to see. But I'm looking bearish on New Zealand dollar just for a few, maybe about 100 pips. So bearish on Kiwi for about 100 pips in favor of the US dollar. So let's go to pound, and the pound is also approaching my my entry level. There is another spike in bearish volume, but it didn't go lower than that previous low over there, and we are back in demand area, and that is potentially a good sign of getting some buying entries over here. We are below the SC, which is all good, and we could potentially get, maybe it's like you can see a head and shoulders pattern over here, and I don't think we've made our right hand shoulder. So here's our left hand shoulder, neckline, head, and then maybe potentially this is part of the neckline before we see a correlated high before going downwards lower. You have to see. I think the bears have moved in on this, and we are looking for a reversal to the lower side in favor of the dollar. We've got all of this space over here which looks like it needs to be filled. I like saying that, but could be some bullshit. Anyways, I'm looking down, I'm looking upwards, I'm looking basically upwards and downwards on the pound, but I do expect us to range a little bit more before we see some serious moves. But it looks like, yeah, we are accumulating here, or sorry, distributing, and we could see a down move. It'll be choppy, most likely. Euro USD. Euro, we are, yeah, I didn't see this, but it looks like we have broken this. So yeah, based on, you remember the dollar index, if you were to reverse this, if I were to do USD Euro, then the dollar index kind of makes sense. So look at this, compare it. Dollar index, you can see it's basically the same thing. So Euro USD, it looks like we're approaching that demand zone, and we will get a rejection here. I do expect us to respect this trend line. Of course, we've broken it. That is on the line chart though, that's on closes. Market doesn't fit, glove doesn't always fit, sorry. So I do expect us to come down maybe into this zone before bouncing upwards. I don't expect us to continue downwards. There is a nice space to fill though, I must say. But if you look at the overall like structure of the market, we can see that we are appreciating over time, but we could in fact just come back down. This is a nice space to fill in favor of the dollar against the euro. So yeah, I'm looking immediate term. I'm looking maybe even downwards lower. The volume, if I just see that, the volume doesn't seem to be spiking, and there is no we haven't made it lower past these lows for the week, which could be a sign that we could be going upwards. On the daily though, it looks kind of bearish, and you can see that momentum there from this initial sell-off. So I do expect us to make a reversal around this area before continuing downwards in favor of the dollar. So let's go to USD Swiss franc, and the Swiss franc is not really doing much. You would expect it to be higher, but the Swiss franc was really strong this week. Oh, not as, yeah, relatively strong. So I don't really care about the Swiss franc, I must say. Yeah, the structure is broken fully. We might be getting a reversal here, going up to the top. I don't really care. Let's go gold. And gold, it rejected that 50% retracement very easily. I was aiming for that 37%, which is halfway between 50 and 61.8. I didn't enter this. I did have an EA entering this, but manual trade did not enter. It's pretty clean, that sell-off, and I do expect us to maybe retrace down to 1807/1800 psychological, which could see maybe just a continuation of the range. I don't know what's driving this market right now. Is inflation, or probably inflation's driving it. So of course, when inflation increases, then gold increases as store of value. But that also means that the dollar would, if inflation's increasing, the dollar will be increasing as well, as the Fed was more likely to intervene in markets. But gold, I don't know, man. Just don't know. Just moves more technically than fundamentally right now. I just can't be bothered to, like, probably being very lazy right now. But yeah, I do expect us to make a retracement over here, continue down to around this area before going maybe higher to 1840, or just maybe even testing these lows. We'll have to see. I can't say for now. And I believe that is all for the technical analysis. Let's go into fundamentals. And MPC, boring member. Aussie monetary policy meeting minutes, which is eyes on that. Wednesday we have Aussie retail sales, eyes on that as well. USD crude oil inventories, and then Thursday we have Euro monetary policy statement. We have the main refinancing rate, so that's very eyes on here. I believe that the euro is being priced to the downside, or like we're just ranging right now. We don't know what's going on, but given this massive sell-off over here, that was on the Fed, but the extension downwards is kind of like a sign potentially that the market is pricing in maybe something negative for the euro. I don't know. Anyways, we have at 1:30 p.m. on Thursday ECB conference, and also unemployment claims for the US looking marginally the same from last week. And then Friday we have retail sales, but of course, go back to that, unemployment claims, they always surprise, so don't take this seriously. And then Friday, pound retail sales, eyes on that as well, looking at 0%, so an improvement but still pretty bad. And then we have a whole load of euro PMI data, and it's looking like we are expanding, of course, still, but it looks like there's a lot of forecast downwards, but it's all over the place, so I won't go into depth of that. And we have pound PMIs as well, so we're looking at a contraction, slight, not we're still in expansion, but a contraction relative to last month. And then we have USD, so loads of, Friday is PMI day, massive amount of PMIs coming out, which is interesting, and we'll have to see how that happens, because PMIs PMIs in general, services, manufacturing, are big signs of how the economy is doing based on the supply side. Of course, we need retail sales to match these. Retail sales is demand and PMIs is supply, so when the PMIs are positive, then usually it means it's a good economy. However, when they're negative, which is below 50, then it's a bad economy. And yeah, I could go into depth of PMIs, goes really in depth, can go down a rabbit hole. But yeah, apparently, according to Bloomberg, they're really good. I don't know, I need to read a paper about that. But anyways, so yeah, I think that's all for me today. No insights into like what I'm reading right now. It's basically the same as last week. I made a habit tracker actually, which is good. And I've also made a commonplace book where I basically keep this little booklet. It's like a passport memo from Muji, very nice. I take it everywhere and see what's going on in the world. But yeah, take care, bye bye. If you're still watching, lol. Bye.